Let's talk about something many CEOs avoid until it's too late. Can you guess? It's estimated taxes. Now, I know that it's not because you don't care, it's because estimated taxes feel confusing, heavy, and easy to put off. And here's the thing, avoidance in Q1 almost always turns into panic later or in the beginning of the next year, like right now in January, when the highs of the holidays and the strategic planning start to wear off and you're about to face tax season. I'm Megan Schwan, your accounting sidekick, and this is the Profit Points podcast, where we turn financial avoidance into clarity and confident decisions. Most CEOs don't ignore estimated taxes because they're irresponsible. They ignore them because no one ever explained them clearly. Income isn't consistent. They're afraid of paying too much in, or they're hoping things will somehow work themselves out. Any of those resonate with you? But I have something to break to you. Hoping is not a tax strategy. Estimated taxes aren't about perfection, it's about predictability. So let's talk about why estimated taxes can feel confusing and how to simplify them. Here's the simplest way to think about estimated taxes. You are paying the IRS as you earn instead of all at once later. Another way to look at it is to think about when you were an employee. When you got your paycheck, you had income taxes being withheld. Now that you're self-employed, that doesn't happen, but the IRS still wants to get paid, hence estimated taxes. So the confusion usually comes from things like having variable income when your income goes up and down, not knowing what your real profit actually is, and then also not separating taxes from your operating cash. It's all commingled together. So one simple shift that you can take and understand is that you don't need exact numbers every month, but you do need a reasonable, repeatable system. We've talked about this before. Every successful business has systems in place, and that includes with your estimated taxes. Let's go through real quick the cost of undersaving and the cost of oversaving. Because maybe you're one of those people that gets so terrified about taxes that you put a ton of money away, but that also isn't the best idea. Let's talk about that fear on both sides. And remember that fear comes from a lack of understanding. So let's change a little bit of that today. So undersaving, how that shows up, it shows up as a surprise tax bill. It shows up when you scramble for the cash to pay. It shows up with stress and resentment towards your business and sometimes even your tax preparer. Now, oversaving looks like feeling cash tight even when your revenue is really good. It can show up as hesitation to pay yourself or invest because you're so terrified of not having enough money to pay your taxes. Or you're hoarding everything, your money, out of fear. We don't want the goal to be extreme. We just want it to be aligned with where you are, with what's coming, and where you want to be. We want to save enough for taxes without starving your business or yourself financially. So, this is where Profit First can be a huge game changer. You've heard me talk about it before, but just to recap, in case this is the first episode you're watching, Profit First is a cash flow management system where we use different buckets, aka bank accounts, to prioritize and manage your cash and profitability. It solves big pain points for business owners, like how to pay yourself or how much to pay yourself, strategically reinvesting in your business, and saving for taxes and creating sustainability. So, when it comes to taxes specifically, the way that Profit First solves this problem is because we are now separating money intentionally, separating your tax money intentionally. And then it removes the emotional guesswork. If this is an area that stresses you out, I highly recommend you check it out. And it also turns taxes into a known planned expense. that comes from your business and not from you personally, which really a successful and sustainable business should be paying taxes on your behalf. When taxes are treated like a priority and not an afterthought, the panic disappears. We've seen this time and time and time again with our clients. It's amazing. And then you get something even better, clarity, because clarity replaces fear. Estimated taxes are not just a financial task in business either. They're actually a leadership decision. You might be hearing some avoidance in your head because I said taxes a number of times already. So avoidance says things like, I'll deal with it later. I hope it's not too bad. I'll fix it when I have to. But leadership says, and we want to switch from being an employee to being a leader, from being a doer to being a no, that wasn't right. From being, I tried to sound smart, just you get what I'm saying though, right? Like we want to shift our mindset and our behaviors to drive us forward, to be bigger, better than the person that we are. So leadership says things like, I want predictability. I don't want surprises. And I choose calm over chaos. So this week's action step is simple and powerful. I want you to ask yourself something. Ask yourself, when it comes to taxes, am I currently undersaving, oversaving, or are you just guessing? And then I want you to ask, what would feel calm instead of reactive? And then I want you to choose one thing. Either set aside a basic monthly tax percent, and if you're not sure what that percent should be, drop me a comment or send me a DM. Review your last estimate and then adjust based off of where you currently are. And if you're not already doing this, separate your tax money into its own account, like create an actual bank account that you move money into. We do it when we put Profit First in place with business owners. They do it on a weekly basis typically, but monthly is great too. And you want to make sure that you're putting that money away, setting it aside. These small moves can save you months of stress later, especially since we're having this conversation in January. Like the last payment for 2025 is due tomorrow. But if you don't pay that, you pay your taxes in April. But at the very least, you can start saving for 2026, start making that move for 2026. So 2026 can be a much smoother tax year when those taxes get filed in 2027. Estimated taxes don't have to feel scary. They only feel scary when they're ignored. So call to action. If you want support building a tax strategy that works with your cash flow, that is exactly what we help our clients do. So you have two options. You can check out our Premier Tax Access Pass. I'll drop it in the comments, where we provide tax projections and planning support throughout the year. Or if you were like, oh, Profit First sounds like that could be the solution to many problems outside of taxes and outside of that, I want you to set up a consultation. It's free. We have a chat. You walk away with some valuable nuggets because that's just kind of who I am. And we can help put Profit First in place in your business. And to do that, you can go to chatwithmeg.com. There's a link, chatwithmeg.com, to book a consult. All right, enough of that. Estimated taxes does not have to be scary. It does not have to be scary this year. This is the Profit Points Podcast. I'm Megan Schwan, your accounting sidekick, helping you replace financial panic with clarity, one decision at a time. And I will see you next week. Bye.